Well, the price of gold has closed above $5,000 an ounce on the weekly chart, and that's an all-time record high. So in this video, I want to look at previous weekly all-time record highs and try to figure out just how much longer and just how much higher the current bull market will go. To TF Metals report for putting this on my radar, I wouldn't have known about it if it weren't for this tweet. In case you're wondering, and this may catch you by surprise, but yes, that's a new all-time weekly closing high for spot gold. Yes, thank you, TF. I didn't know about this until this tweet, and you can see in the past 2 or 3 weeks, we got really high intra-week volatility, extremely high, dropping as low as 4,400 and going as high as 55, 5,600. So the price of gold definitely fluctuating quite a bit, but last week it did close above $5,000 an ounce for the first time. So thank you, TF. I want to start with this chart here, which includes the price of gold. That, of course, is the gold line. And then this black line here, which looks like it's cut off at the top, this is actually the percent that gold is back from its all-time high. And all the data points here are weekly. They're not daily, they're weekly. And so it looks like the data are cut off at the top of the screen, but that's actually not the case. It only goes to 0. So if the black line is up at the top, that means that gold is at an all-time high. In other words, it's 0% off of its all-time high because it's at an all-time high. And there's something very interesting about this, aside from the major drawdowns, as much as 70% right after the bull market of the 1980s or the 1970s that ended in 1980. After 20 years, it was down about 70% from its all-time high. So very interesting to look at the price of gold this way, but there's something else I want to call your attention to, which is the fact that all-time highs come in clusters. This probably isn't surprising, but you can see these 4 clusters where the black line groups at the top of the screen, at the top of the chart here. And of course, we're in one of these regimes right now. So it's not very surprising that we're getting weekly all-time high after weekly all-time high. In a previous video, we talked about how silver's returns are not normally distributed. Neither are gold's. In fact, no financial asset has a return profile that is normally distributed, so it doesn't really make sense to use the normal distribution on anything, but people do it anyway. But I digress. So anyways, we do get these chunks here, and this leads us to one of our key takeaways.
All-time highs rarely occur in isolation. They arrive in clusters. History shows that during strong bull markets, record weekly closes can account for more than 1/3 of total trading weeks. In the late 1970s, roughly 34% of weeks ended at new highs. In the current cycle, which began around 1999, that number has been even greater. This concentration of records signals a high-density regime, a period when upward momentum feeds on itself. Instead of long drawdowns, pullbacks remain shallow. That pattern often reflects strong underlying demand and persistent capital flows into hard assets.
Number one, we are in a high-density all-time high regime. So back in the 1970s, about 34% of weeks were new all-time high closes. So that's kind of a lot, like 1/3 of them. That's pretty good. In the current bull market, which started in 1999, 39% of weeks have been all-time high closes. So even more. So we have more and more weekly all-time highs than we did in the 1970s, which is very interesting. So we can say that the current cycle has already produced a higher concentration of record weekly closes than the 1970s. That's pretty interesting. And one other thing I want to point out on the chart here is that if you look at this black line being up near the top lately, you don't see many drawdowns. You don't see anything of 10% in the last few years. You know, if you go back to maybe 2022, that's when you get a drawdown of about 20% from the weekly all-time high. But lately we haven't had one, which is very interesting. And I guess that's a good thing if you're rooting for the price of gold to go up. It's a bad thing if you want to buy more, but you know, can't have it both ways. So that's very interesting, and that is pretty typical of towards the end of a bull run. So obviously there was a huge drawdown in the middle of the 1970s of about 45% or so, but you know, towards the finish, there weren't very many big drawdowns.
One striking feature of this cycle is the absence of deep corrections in recent years. While earlier phases saw declines of 20% or more, current pullbacks have been brief and limited. Historically, major bull markets often conclude with reduced volatility to the downside as buyers aggressively step in on dips. This compression phase can precede powerful final advances. The comparison to the late 1970s is compelling. After a mid-cycle correction, gold entered a phase of relentless ascent. Today's resilience may indicate we are not at the beginning of exhaustion, but potentially approaching acceleration.
Number 2, all-time high streaks are getting longer. This is interesting. Not a lot longer, but they are longer. So we're looking here at the longest consecutive weekly all-time high streak. So how many weeks in a row was there a new all-time high? And in the 1970s, the record was 7 weeks in a row. And that happened between September and October in 1978. In the current bull run, it's actually 8 weeks long, and that happened last year between August and October. So I didn't realize that at the time, but when we were enjoying that climb up in August, September, October, we hit 8 weeks in a row with a new weekly all-time high, and that in and of itself, that 8-week block, set a record for gold. It had never done that before, so very exciting. And we might say that the current bull market is likely more vertical than the last one. We know it's certainly more horizontal. It's taking much longer to play out. So instead of 10 years, we're already about 27 years in, but it's likely more vertical as well. So it's not over, so we can't say for sure, but it's probably the case that it's going to have a higher percentage return and more of these record-breaking moves, whether it's number of weeks in a row or the percentage of weeks that include an all-time high. It seems like it's more of a vertical bull market as well as being more of a horizontal one. I have a chart here that is showing similar information to what we were just looking at. We have the price of gold in gold, but instead we're looking at the all-time highs through a different lens. We have a blue line and a black line, and they're both answering a similar question. The blue line is saying how many weekly all-time highs were there in the last 26 weeks. So basically looking back about 6 months and saying, just count up how many weekly all-time highs there were and plot that. And the black line is doing the same, but over twice the period of time, 1 year. And so of course the black line is always going to be higher than the blue line. But it's interesting, you can see that, there's long periods, like here there's, 28 years or 27 years, something like that, where there's no all-time highs at all, absolutely brutal. But then once we start getting them, we get them pretty quickly and we get them very frequently. And also at the end of the 1970s bull run, we had 26, I believe half the weeks, 26 out of 52 were all-time high weekly closes, which is pretty incredible. And where we are now, we're at 24, so very close to 26. Who knows, in a couple weeks we could be there. Literally in 2 weeks we could be there. So it is very interesting. And so you see something like this and you say, wow, we're pretty much at the level we were at back at the end of the last bull run. Is this the end? Are we here today? I don't think it's going to end today. I think we do have a little bit more time, but not a lot of time, and that's what I'm going to show you next.
Another revealing metric is consecutive weekly record closes. In 1978, gold achieved 7 straight weeks at new highs, a record at the time. Recently, that benchmark was surpassed with an 8-week streak. While this may seem incremental, such extensions reflect increasing vertical momentum. Longer streaks suggest stronger conviction among buyers and reduced willingness to sell. Financial returns are not normally distributed. They cluster and surge unexpectedly. When streaks lengthen, it signals trend persistence. Historically, these streaks have not marked the end of bull cycles, but rather preceded some of their most explosive moves.
Number 3, all-time high streak records don't end bull cycles. Okay, so we don't have a super large sample size here, but we're just looking at the limited pattern that we do have. So here we're interested in the time after the longest consecutive weekly all-time high streak. So that's what we talked about a little bit ago, 7 weeks in a row, 8 weeks in a row. Basically in the 1970s, what happened after that record streak? There were 7 weeks in a row, 7 consecutive weekly all-time highs. Did that come at the very end of the bull run? That's the question. Or was there more time after that? And the answer is 65 weeks happened after that. So those 7 weeks ended in October of 1978. We mentioned that earlier. And then there was another 65 weeks going all the way to January of 1980 before the bull run came to an end. So if we just extrapolate out another 65 weeks from the record we just had in October, that would take the end of the current bull run to January of 2027. Is this a great, reliable metric? No. Is it a little interesting? Yeah, maybe it's a little interesting. That's why I'm mentioning it. So we could be in the final year of the bull market. We're already in February. It could end in January of next year. Maybe. Obviously, I don't have a crystal ball. Nobody does, but it is interesting. So we could be in the final year of the bull market.
The most dramatic gains in a bull market often occur near its conclusion. After the 1978 streak, gold continued climbing for roughly 65 more weeks before peaking in early 1980. During that final phase, prices rose more than threefold. That historical precedent is not a guarantee, but it offers perspective. Late cycle momentum can compress years of returns into months. If today's market were to follow a similar trajectory, the potential upside could be substantial. Such moves are fueled by accelerating inflation fears, currency debasement concerns, and capital rotation into tangible assets.
So you might ask, why bother joining the gold party? If it's almost over, right? Why even bother? And the answer is because the biggest move comes at the end. So again, let's look at some more numbers from those 65 weeks. In the 1970s, gold was up 3.5x, that's over 250%, in the final 65 weeks. So in just a year and a quarter, 3.5x. That is fantastic. And the prices of gold on those dates are right here on the screen. Went from 234 to 835. And 835, that's a weekly close, okay? That's not even the intraday high, which was 873. So just looking at weekly closes, it's this number. If you get lucky or are extremely skillful or have insider information and you can capture that daily high, the intraday high, you could do even better. So again, let's look at the equivalent in the current bull market, 1999 to present. Okay, in 65 weeks, what would that look like? Well, we go back to October's price when it closed that week at 42.50, and we multiply it by 3.5x, and we get January of 2027, about $15,000 an ounce. Okay, so according to these numbers, we could see gold prices triple in the coming year. Not too shabby. So no guarantees, obviously, but just taking the old numbers and applying them to the current bull market to see what we get. It's interesting.
Today's environment adds additional fuel. Central banks, led by institutions like the People's Bank of China, have been increasing gold reserves. Meanwhile, persistent fiscal deficits in the United States and elevated global debt levels reinforce gold's appeal as a monetary hedge. Unlike previous decades, this bull market has stretched over a quarter century, making it both more horizontal and increasingly vertical. Whether the peak arrives next year or later, history suggests the most dramatic chapter may unfold in the final act, and that act may already be underway.